Xmoon Tutorial, Part 8, Risk-Free and Target Exit Lines. In Xmoon, after entering each step, we always have two distinct exit scenarios. The optimistic exit scenario involves exiting on our target lines. This is for when the market moves precisely in the direction of our analysis and we are looking to secure our profits. And the pessimistic exit scenario involves exiting on risk-free lines, for those times when the market is uncertain and we want to exit the trade without incurring any loss. The important point is that the target and risk-free lines for each step are calculated separately and specifically and are drawn on the chart so that in any situation, whether emotional or logical, we can make decisions very quickly and easily. The green dashed line is target. The gray dotted line is risk-free. What is the risk-free exit line? Within the Xmoon pattern, the risk-free line is presented on the chart in a distinct gray dotted format. This particular line is automatically computed for every single step based on the weighted average of the volume of all the steps. For instance, when we get into a transaction and arrive at the third stage, there is a specific point where if we close out all of our positions from the first, second, and third steps at that exact moment, we will neither make any profit nor suffer any loss. This particular point is precisely what we call the risk-free level for 1, 2, and 3. The important point is that with the entry into each new step, the next risk-free line becomes valid. This means that when we enter the second step, risk-free lines 1 and 2 are valid. And when we enter the third step, risk-free lines 1, 2, and 3 are valid. Upon entering the fourth step, risk-free lines 1, 2, 3, and 4 become valid. And this pattern continues for all subsequent steps. There are three important points we need to know about risk-free lines. In the Xmoon indicator, the calculation of risk-free lines is performed solely based on mathematical formulas and the weighted average of step volumes, and these calculations are unrefined. For this reason, defining a risk-free level for the first step practically holds no specific meaning because the weighted average of the first step with itself is precisely at the exact same entry point. However, we must note that for all risk-free levels, we need to consider additional costs like commission, spread, swap, etc., proportional to our broker, exchange, and account type. What is the target output line? In the Xmoon pattern, the target line is displayed in green and as a dashed line on the chart. This line is automatically calculated for each step based on conservative parameters and the pattern structure. In simple terms, when the market moves past the risk-free level and proceeds according to our analysis, we then enter the profit zone. We understand that each trading step possesses its own distinct target and risk-free levels. Therefore, the validity of target lines is precisely comparable to that of risk-free lines. This implies that as soon as we enter the first step, target line 1 immediately becomes active and valid. When we proceed to the second step, target lines 1 and 2 are considered valid. When we then proceed to the third step, target lines 1, 2, and 3 are considered valid. And when we proceed to the fourth step, target lines 1, 2, 3, and 4 are considered valid, and this pattern of validation extends to all the subsequent steps. There's a very crucial point we absolutely must understand regarding target lines. When the price reaches the target of the current step, it signifies that the order placement mission for that specific pattern has been fully completed. Therefore, we absolutely should not proceed to any subsequent steps. Instead, we must patiently await a completely new signal. Now, if we were to summarize all these important concepts into just one concise sentence in Xmoon, after entering each and every step, there are always two distinct paths lying ahead of us. If the market proves to be uncertain, we'll exit at the risk-free level, thereby protecting our capital. However, if the market shows strength, we'll continue our strategy until we reach our targets. This particular choice always depends on the prevailing market conditions and even our own psychological state.